Let's pretend that I treat myself to an expensive vacation in March. And we can see that it has been reflected on both tables on our dashboard. Hi guys, how's it going? Today we're going to be doing a plan with me video. However, today's plan with me is going to be about my budget. So for years, I have been using Google Sheets to track my budgets and expenses. And I do track them almost every day. If I miss a day, I make sure that I do catch it up the next day and I never go more than 3 days without touching my budget spread. So having this meticulous process in tracking my expenses helps me keep myself accountable to make sure that whatever that I'm spending is not exceeding whatever that's coming in. Or if it does, I make sure that there's a system for me to balance them back. Also, by tracking my budget, it also puts me at ease knowing that I'm not overspending without noticing it. Throughout the years, the template on my Google Sheet has evolved to suit around my needs and how my lifestyle changes. So today, I'm bringing you guys with me to follow a step-by-step plan on how I build my budget spreadsheet on Google Sheets. However, I'm going to make it a little simplified for general understanding. Of course, my own budget spreadsheet might be a little bit more complicated than that. However, you may have a look and see whether it suits you or whether you need to use this and tweak it to your lifestyle. Alright, let's get going. So my budget tracking will be based on the 50-30-20 rule. Of course, some of you guys might have heard of this and some have not. So in case you haven't, the 50 means that 50% of my income goes to my needs, 30 means 30% goes to my wants, and 20 means that 20% goes to my savings. As my budget tracking evolves throughout the years, the percentage have changed. However, for the purposes of this video, we will go with the 50, 30, and 20. Okay, so step 1, open a new Google Sheet document or an Excel if you want, and let's give it a name. I'll name this my 2025 budget spreadsheet. And for sheet number 1, I am renaming this to notes as I will be using this space to type notes that we will be bringing it forward to use in the next spreadsheet. So what I'm doing now is to list up my needs, wants, and savings into subcategories. If you are planning along with me, just note that these are not fixed categories. You can put them according to your own lifestyle and needs. I would like to make a clarification here. I know some people classify their rainy day fund or their savings account as part of investments. However, I do separate them as my investments mean stock and bonds, which are more fluid and where I can take the money out at any time. And I also have another rule for myself where 10% of my income goes to my rainy day fund. So that is a little note I'm making here. Alright, time for the heavy lifting. Go to the Insert tab and insert a new table. This will open a table in a new sheet which we'll be using for January. Then we will be doing some renamings. Let's rename this spreadsheet to January and rename the table name to January as well. Next, we are going to rename the columns. We will give it the name Date, Description, Category, Subcategory, Money In, and Money Out. I know some people prefer to use debit and credit instead. However, to make things simple and easy, we would say money in and money out for this spreadsheet. As a general overview, this is what my spreadsheet looks like. What we are setting up here is the daily records section. This section is where we input our daily individual transactions and categorize them. So we go back to our notes page and remember this little section where we list out our categories. We are going to copy and paste them onto our main spreadsheet. What we are going to create here is the sum per category section. So now I am giving it a title called sum by category, and on top of it I am adding a total income section as well. One of the reasons I want my daily records in a table format is so that I can change the column type to make this into a drop-down section. Once you have chosen it to be a drop-down column, this will appear on the right where you get to input the type of drop-down selection that you want. The next process will involve a lot of typing. However, we will already have a reference in the middle of the screen. What I'm inputting here is the list of different categories that I have preset for myself. Then, to make this more visually appealing, I am selecting colors for the different drop-down selections. I'm selecting the same color for everything under the wants category, same color for everything under the needs category, and the same color for everything under the savings category. And when we go back to the daily record section, this is what it will look like. With that in place, we are going to next set up our sum by category section. This is a section where it gives us the overview of how much we have spent by category for the month. This is where some Excel knowledge will come in place. Here I am using the sum if formula. This formula will return the sum of the value if the conditions are met. So my conditions are set to column C. If it matches the exact same name as the one I am typing in right now, it will add up the total sum for me. Here is a test example I'm going to show you. Say on the 1st of January, I paid rent and the money out is $100. Then a few entries later, I need to pay my rent again. So I am inputting another $100 here. Now as you can see, under sum by category, my rent is now the total of what I have inputted for the month. Next, I'm going to drag this down and to copy the formula for each corresponding category and to edit them one by one. Then at the bottom of my needs, I am adding a total section where I total up the sum of my expenses under the needs category. Don't worry if you haven't left a space for it, you can always right-click and choose to add a row above. Then we will be repeating these steps for the wants category and the savings category. Note that I didn't include the same formula for the remaining to save section because the remaining to save section means whatever is left after my total income minus the other expenses. The formula for my total income will also be the same as the rest, sum if, and making sure that I have an income selection as part of the drop-down selection under the category column. And I will need to manually type in the formula for my remaining to save, which is the total income minus the total of needs and wants, as well as the other allocations under my savings category. To test this out, here I am going to input a record of a $100 income as well as a $10 expenditure on coffee. As we can see here, our coffee purchase has been recorded as well as the income and the net amount of $90. Next, we are going to set up the sinking funds section. For any viewers who haven't heard of a sinking fund, it is a pool of money where we contribute amount gradually for a medium to long-term goal. How I am setting this up is to have an opening amount, contributions for the month, withdrawals for the month, and a net amount. Now let's go back to the notes spreadsheet. Here we are listing out our medium-term sinking funds and our long-term sinking funds. And here are a few examples of it. Little side note here, in this example, when I list property under the long-term sinking funds, it does not mean that this is the only source of money where you use to get a property. We do need to take into account that different countries have different retirement fund schemes where you can take money from there to purchase your property as well. Now that we have listed out a few examples of sinking funds, we are going to copy and paste the section onto our current January spreadsheet. Next, we are going to copy and paste the same template for each of our sinking funds. Now that is done, we are going back to the main daily record section and input the individual sinking funds under the subcategory. To do this, we will be using the same steps that we used to set up a category with the drop-down selection. Here I am typing SF as a short form for sinking funds, followed by the name of the sinking funds that I am allocating it to. Here I am using the sum if formula again. What this does is that it will total up the sum if the selection under the subcategory matches the name of my sinking funds. Here is an example of me allocating $10 to my annual vacation sinking fund. And if we look over here, we can see that $10 has been added to the contributions. However, I also realized that I forgot to input a formula for the net, so that is what I'm doing here. And I'm going to test it out by allocating another $10 to my annual vacation sinking fund. Yay, it worked! Alright, next I'm going to do a little bit of troubleshooting. Say I have intended this $10 to go to investments, but I accidentally selected my annual vacation under subcategory, and it still shows up here. So that is where I'm going to use the sum-ifs function. What this function does is that it will only tabulate the sum if the columns meet 2 or more criteria. In this case, my first criteria is that the category must be selected as to sinking funds. And my second criteria is that under the subcategory, it must be allocated to the appropriate sinking funds. Oops, got a typo there. So now we can see here that it only tabulated the amount from the first entry but not the second, because the second entry does not meet both criteria. And here, by changing the second entry's category to the correct one, we can see that it has tabulated the amount for both entries. And here is me setting up the sum-ifs function for the individual sinking funds. Here's a little side note on where my sinking funds are allocated in the bank. There is a method where people have opened multiple savings accounts to allocate for each of their sinking funds. Personally, I have a different approach to it. Let's imagine that this circle represents the total amount of money I have in my sinking funds. There are different amounts allocated into different accounts in my bank, such as term deposits and savings accounts. This is mainly because I do not want the money to just be sitting in the bank and not earning any interest. On the other hand, I would like to also pull out some money when I need them. So I have a part of my sinking funds in term deposits. That's where it can earn me a higher interest, but the downside is it is not readily available until it has matured. And some parts of my sinking funds are allocated in savings account or checking account, where it earns a lesser interest, however, I can withdraw from them when I need to. A disclaimer here, the setting that I just mentioned is an example of a personal finance setup. It is not financial advice. So in order to monitor that, I will need to set up another table. What this table does is that it tabulates the total amount of money I have in my sinking funds, as well as the total amount allocated into different accounts. And the net amount would be called the variance. It is the amount of money that has not been allocated into any accounts. In my case, it will be sitting in my checking account. Now I realize that I had forgot to tabulate the sum for each individual sinking funds. So here is me doing a backtrack. And now I am inputting random numbers to test out whether this setup has worked. Alright, seems like we are happy, and let's move on to the next section, which is the cash flow summary. Remember our 50%, 30% and 20%? This is where I will track whether I have met those goals. Here I am using the equal function to make sure that the amount on this table corresponds to the amount shown on their respective cells. Remember that the total amount for needs, wants and savings have already been totaled up in the sum by category section. After that, I am inputting a formula that tabulates the total amount of money I spend under each category over my income for the month. Under the percent target column is where I will input the 50, 30 and 20. I have input them as decimals and used the percent button on the toolbar to format them into percentage. The next column will specify whether I have met the target or not. Here I am inputting a formula where if my actual expenditure under needs is below my target, then it will return a yes. If it doesn't, it will return a no. I am repeating the formula for the wants category as well. For my savings category, it will be the opposite. If my actual allocation is higher than the percentage of my target, it will return a yes. Otherwise, it will return a no. Here I am giving it a test. Say I have received $100 as an income from work. Then on the table, we can see the corresponding amount. Next, let's say I spend a hypothetical $5 on coffee. Then we can see the $5 being reflected over here as well. And under the cash flow summary, it is shown here as well as the percentage being calculated. The next section we are going to tackle is our on-the-go money or your checking money. This is the money where it does not sit in any particular term deposits or savings account. Depending on the bank, it could be the account where you earn a very little interest and you pay tax on it, or it could be one where you pay a monthly fee to keep it open. Since this is the on-the-go amount, the contributions for the month will be the remaining to save section under our savings category. The next section we are going to set up is the rainy day fund. Some people have a rainy day fund and a separate emergency fund. Personally, my definition of a rainy day fund is the same as my definition of an emergency fund. Therefore, I will be treating them as the same thing. Finance is personal, so therefore, if you need to have a separate rainy day fund and an emergency fund, there is nothing wrong with it as well. Here I am linking the contribution cell to the two rainy day fund under the savings section, so that they will have the same values. The allocation of my rainy day funds is similar to my sinking funds in the bank. They are not all sitting in one place, but they are in different term deposits and savings account. This way, they are earning some form of interest rather than just sitting idle in the bank. To reflect that, I will need to set up a similar system as I did with my sinking funds. With this setup, I am aware of how much money is in each term deposit or in each savings account. And of course, in the end, I will need to calculate a variance. The variance reflects the amount of rainy day fund that has not been allocated to any term deposits or savings account. Speaking of rainy day fund, let's calculate our estimated amount. There has been advices out there that says that your emergency fund should target 3 months of your expenses, and there are some that says it should target 6 months of your expenses. As I am not sure which one I should be aiming for, I will be monitoring for both. Here I am listing out the past 6 months and my respective expenses for each month. Below this section, I am going to calculate the average amount I have spent for the past 3 months and the average amount I have spent for the past 6 months. And below that, I will multiply the average amount by 3 or 6 to get the respective target amount. I know that averaging the monthly expenses is an extra step and can be redundant. However, I would like to have it in my spreadsheet because I would like to see if there is a change in average that I spent in the past 3 or 6 months. Then even below that, I would like to have an indicator on whether I have met the target. This setup is similar to one that I have used previously in this spreadsheet. So if the total of my rainy day fund is the same or bigger than my 3-month target, it will show a yes, otherwise it will show a no. The same goes for the 6-month target. Next is the term deposits for monitoring purposes. Unless a term deposit is at maturity, I am not able to put in or take out any money from it. So this section is only going to be a monitoring of my opening amount and my closing amount for the month. Although banks have a limit on how many term deposit accounts a person may open, I am aware that some people may have different banks and they might have different term deposits open in each of them. So I am putting 6 term deposit accounts here just as an estimate. Now we are going to set up the monthly subscriptions part. For the column headings of this section, I am including a description, the monthly amount to be deducted, and a tick box to indicate whether I have already deducted the amount from the daily entry. Just realized I forgot about the savings account section. Savings accounts are accounts where the money will earn an interest for you every month, and you may withdraw the money whenever you like. However, depending on the bank, there may or may not be a penalty for it. Unlike term deposits, you do not need to wait for a maturity date before you can continue to contribute to your savings account. Therefore, the way I am setting out the savings account section on this spreadsheet is one where I can include my opening amount, my contributions for the month, my withdrawals, and the net amount. As some people may have different savings account open, I am including another one down here. Now we are going back to our daily records and go to the subcategory column. Then we are going to add on more options, Savings Account 1 and Savings Account 2. Going back to our Savings Account section, we are going to click on the contribution cell and use the sum-ifs formula again. Here we want it to total up the sum if it meets two criteria. The first criteria will be the category column, where it should be selecting the Savings to Savings Account option, and under the subcategory, it should be choosing to Savings Account 1 option. Then I am repeating that step for the contribution cell under Savings Account 2. Now I am testing it out by allocating a hypothetical $100 to my savings account. And here I realized there is a typo in my code. Now that it has been fixed, we can see the $100 appearing on the allocated cell. And now I have to fix the code for Savings Account 2 as well. To test out whether my code has worked, I am giving myself a hypothetical $50 to allocate to Savings Account 2. Cool, time to move on. And the last section to set up on this page is the balance sheet. Because my spendings and my funds allocation is heavily reliant on this piece of spreadsheet, I need to make sure that at the end of the month, that the grand total of the amount here reflects the grand total of amount I have in my bank. The balance sheet is generally divided into two parts. The first part is to total up the amount I have on this spreadsheet, whereas the other part is to total up the amount I have in my physical bank. Note that rather than the sinking funds total, I have included the sinking funds variance instead. This is because part of my sinking funds is already allocated in the term deposit. Same thing goes for the rainy day fund, where I put the variance instead. At the bottom of my balance sheet, I am summing up the total for these two parts. From these two totals, I am able to calculate the variance, which is the difference between what is actually in the bank and what I have recorded on my spreadsheet. Knowing this difference is important to me as it alerts me of transactions that I may have missed out. The difference in this money will be recorded on the next month's spreadsheet, which will be shown later on in the video. Before moving on to February's spreadsheet, I would like to add a pop of color to January's spreadsheet to differentiate between the different sections as well as to make it more visually appealing. Also, I added a notes section in case there is something that I would like to take note of for the month. In order to create the February spreadsheet, I duplicate the January one and rename it to February. Then under the sinking funds, I selected the opening cell for February to reflect the amount that is shown under the net cell in the January spreadsheet. Then I am repeating the same steps for the other sinking funds opening balances. Next, I am doing the same steps where I am putting in a formula to ensure that my opening balance for the account is the same as the net balance that I have for my previous month. I'm doing this for my on-the-go account, my savings account, and my rainy day fund. And I am doing the same thing for the term deposits monitoring section. Next is to update my rainy day fund estimation. As this lists the previous 6 months, I will need to update this list for each new month spreadsheet that I create. And since we already have the January spreadsheet set up, I will select that January cell to make it equal the amount of needs and wants expenditure from my January spreadsheet. Hi, this is me from the future because there is a step that I forgot to include. So for my opening on-the-go amount under my February spreadsheet, I also need to add the variance from the January spreadsheet. This is to take into account any transactions that I may have missed. Then I will duplicate the February spreadsheet and rename it to March. Next, click on the Edit button and click on Find and Replace. What we want to do here is to replace all the January phrases into February. Remember to click on this sheet only so that it focuses on the March spreadsheet, and also click on the search within formulas because that is where we want the replacement to happen. So when we click on the cell, we can see that it has been updated to reflect the closing amount on the February spreadsheet. And I just realized that I had missed one out, so this is me backtracking to fill in the missing formula. The next step is to update the previous 6 months list under the rainy day fund estimation. With that done, it is time to duplicate the spreadsheet to create the April spreadsheet. Keep doing this until we have all 12 months spreadsheet ready. The next step is optional, but it is one that I like the most. It's to create a new spreadsheet and rename it to Dashboard. The purpose of a dashboard is so that I can have a general overview of my expenses throughout the entire year. This dashboard is a fun part because depending on your own personal finance goals, you can pick and choose the metrics that you want to monitor throughout time. For the sake of this video, I am providing an example of me monitoring my expenses under each category throughout the entire year. Here I am copying the list of categories that I have written out and paste it onto my dashboard. Then I am renaming the column header to reflect each of the month. Then under each month, I am putting in a formula that reflects the sum by category from their respective months. Here I am giving it a test. Let's say that in January I have spent $10 on petrol. And as we can see, it has been reflected on the spreadsheet. And as we go back to our dashboard, we can see that it has also been reflected on our dashboard. Repeat the steps for the remaining columns. At the end of the column, I would like to add a grand total. This totals up the money I have spent per category in the entire year. Next, I am adding a new row in the table to reflect my total income per month. Then, from the total sum obtained from the big table, I can use it to fill up the small table at the top of the page. And the remainder of this table is to set up to monitor whether I have been compliant with the 50, 30 and 20 rule. If yes, I can continue my spending habits as usual. If not, I might need to review my spending habits. The cells are currently showing an error because my income is currently 0 and they can't divide by 0. I will carry out a test later on in this video to test if my formula has worked. Next, I'm going to test out my spreadsheet. Let's say from January to April, I receive $1,000 per month as an income. I know this might not sound realistic, however, for the sake of testing, let's pretend it is. So we can see that the amount has been reflected on our dashboard. Next, let's pretend that I receive extra income from a side hustle in February. Now we can see that the amount has been reflected under the February column. Then let's pretend that I have manually put in money to invest in stocks in February and March. And as we go back to our main dashboard, we can see that the money I put into investments has shown up in the respective rows and columns. For the next test, let's pretend that I contributed $10 to my savings account in January. As we can see, the amount has shown up under the savings account section. And if we go to the February spreadsheet, we can see that the $10 has also been carried over to the February spreadsheet. And going back to the main dashboard, we can see that the amount has also been reflected under the January column. Same goes for the total column. Note that the small table on top no longer shows an error as my income now is not 0 and it is able to divide and show a value. Next, let's pretend that I treat myself to an expensive vacation in March. And we can see that it has been reflected on both tables on our dashboard. Speaking of whether I have met my targets, there is this feature called conditional formatting. What this allows is for you to set criteria to how you want your text or the cell to display. My aim here is for if the text is yes, I want it to appear green. If the text is no, I want it to appear as red. The next scenario that I'm going to demonstrate is me treating myself to a vacation. However, this time we are not taking out money from the income that I earn in that month, but we are taking the money out from the pool of sinking funds. So as we can see here, my opening balance for my sinking funds for annual vacation is 0, and I am contributing a hypothetical $500 to it. Now let's move from January to the February spreadsheet, and we will see the $500 being reflected on the opening statement. And in February, I decided to treat myself to my annual vacation using up the $500. Rather than deducting it from the main spreadsheet, I'm deducting it from the sinking funds instead. What this portrays is that sinking funds is a big expense that I have saved up prior months, and I wouldn't want it to affect my percentage of the 50 or 30% that I spend as usual expenses each month. Next, I am going to test if the formulas I wrote under target met will run as intended. So I am giving myself a hypothetical huge amount of expenses to tip the scales. And as we can see here, if my expenses have exceeded the target I set for myself for that category, it will tell me that I have not met my target. So for a lot of people, they get excitement from having a graph that represents their data on their dashboard. However, I am not going to set one up for this dashboard. This is mainly because everyone has a different financial goals and everyone will have a different metric that they want to track with the data. Some people may also want to track their spending patterns midway throughout the year. Here is an example of me tracking my rent or mortgage payments from the month of January through to April. You may use this method to create permanent graphs for your dashboard, or you may want to review your expenses midway throughout the year and create more graphs from there. Alright, we are at the end of the video. I know this type of budget tracking setup may not be suitable for everyone, however, I do hope that you have learned a thing or two from this. Or at least I hope that you have been intrigued to pick up some of Excel or Google Sheets skills. If you would like to download a copy of this template, the link is in the description. Thank you for watching till the end, and finally a disclaimer again. This is an example of a template for a budget tracker. This is not substitute for financial advice. I am not a financial advisor. Please do your research and due diligence before making any changes to your financial decisions. Alright, see you next time.